Voice of your claps. So please be generous in clapping and welcoming our speakers for the next coming period. I will be thankful to you. Friends, direct taxes is the area where FBR finds very difficult to increase the tax net. With due apologies, Tanveer Saab. It is commonly said that taxpayer is being taxed more. The person who is being taxed is being taxed again. Widening the tax net is the ever-challenging area where the authorities must work hard and penetrate into the loopholes to block all such tax evaders. FBR has accepted at various forums that tax evasion hits 79% this year as compared to 69% last year. Now you will see what is tax evasion. The tax evasion is the difference between potential tax and actual tax achieved and collected, which is alarming for the government if it is 79%. As to how they plan to achieve the tax collection target of 1,952 billion rupees, where the budget is already holding 850 billion rupees fiscal deficit. It still remains a question for the professional accountants and business community that so-called measures of broadening the tax base, bringing evaders and non-taxpayers under the net will be practically carried out by the government on this year. Also, the burden will be shifted to existing taxpayers and society at large by levy of indirect taxes through mini budgets for the sake of survival of the economy and obeying the orders of ICMAP. To discuss the issues relating to direct taxes, I would like to invite our learned speaker, Dr. Abdul Qadir Mehman, one of the well-known personality to our audience. Dr. Mehman is a tax and company law consultant, visiting faculty for law and taxation at reputable institutions, a member of advisory committee of the Federal Tax Ombudsman, FPCCI and Karachi Chamber. He also served as President Income Tax Bar Association and Mehman Professional Forum. Please give a warm welcome to Dr. Abdul Qadir Mehman.
Thank you very much, Ata. At the outset, I would like to thank Ata and his team for making me a doctor. In fact, I don't know. I would like to ask you to make a prayer for me that I would become a Dr. Shai Saab, the caliber of the Shai Saab. So I'm just ordinary tax consultant and the former president of Pakistan Tax Bar Association. I would like to express my sincere thanks to the office bearers of the Karachi Tax Bar, Karachi Branch Council of the ICMAP, especially Mr. Tariq Hussain, Chairman KBC, Mr. Muhammad Hanif Ajari Saab, the Vice President of ICMAP, Anisur Rahman Saab, Secretary General, Shafi Bhai, and Ata, and all of you. I'm also very delighted to have today's chief guest, Khwaja Tanveer Saab, whom I have worked a lot on the different reports. And he is the man who has very actively played a role in the tax reforms when he was a member of the tax reform at that time. So, as always, I come to the ICMAP program always to have learned something, and I always, when I entered into the room of the ICMAP program, when I go back, I always found to be more wiser and more knowledgeable than I am when I used to come in these rooms. So today I'm expecting the same thing. I'll try to share what little bit I know about the law. And my another great opportunity is that it is very hard to find, have the opportunity to have the Dr. Shai Saab, who also has a command on the subject. So this is a wonderful opportunity for all of you to inviting me. In fact, today's I would like to make you some some few minutes to bore you, because I will talking about the legal inaccuracies, and I don't know how many of you would be interested to know. But I think being a tax consultant, it is my specialty that I should talk about in the language of the law, and I should try to explain it to you what changes have been made in the law. So, the pattern of my presentation would be that I would be talking first the proposals which have been made regarding the investment and the savings. The second, I would be talking about the provisional assessments, which we all are listening nowadays. Then I would also be talking about the broadening of tax base. And then the fourth, I will be talking about what penalties have been changed. And then I will be talking about the withholding of tax. And then I will be talking about a few minutes on the taxation of the banking, what changes have been made. And then what effort has been made to bring the uniformity of the law. And then the scope of the unexplained income has also been enlarged. And then I will be talking about the removal of the contradiction in the law, and then the write-off of the irrevocable loan. The first is the investment and the saving. The finance bill seeks to amend subsection 1 in order to enhance the tax credit for the company which opts for the enlistment in any registered stock exchange as an incentive for enlistment from 5% to 15% of the tax payable for the tax year in which the said company is enlisted. I'm sure that this step will encourage enlistment of companies in stock exchange. Because of the effective rate, instead of 35%, it will be 29.75%. But in fact, what we feel, and SSCP has also made a proposal that this concession should be at least for 5 years, because in 1 year of the enlistment will not make any great impact on that. And that is why in the summary it was been said that it will have a tax neutral and they will have a no tax impact on that, The next, which is very encouraging proposal which has been made by inserting section 65D, whereby the tax credit of 100% of the tax liability to a company which establish a manufacturing industrial undertaking in Pakistan or invest in the purchase and installation of plant and machinery for the purpose of balancing, modernization and replacement. Usually we know about BMR of plant and machinery already installed therein. The tax credit shall be allowed for a period of 5 years from the date of commencement of the commercial production or 1st July 2012, whichever comes later. However, the tax credit shall be available only to those industrial undertakings which are funded by 100% own equity. Let me give you some background of this, why this proposal has come. While we were in the Revenue Advisory Council, we were discussing this proposal. It was felt that today's interest rate is due to so many reasons. And one of the reason is that because of this one of the reason, the investment, the credit is not been financed to the private sectors, So we thought that we should come up with some idea whereby we should encourage the people who are going to fund themselves, and they should also have some incentives. So at that time, the proposal was that we should give them a deemed interest as a credit on the amount invested. But unfortunately,